Alright, Assalamualaikum warahmatullahi wabarakatuh. So today our group will be presenting or discussing about a question for our second group task, which is regarding with the topic spreading with FKLI. The type of spread that we will be focusing on is the intermarket spread, and we will be discussing about the past year question of June 2018, question 4B. Alright, first we move to the question itself. The question states that despite the gradual recovery of the world economy, the stock market has been performing reasonably well. What is meant by this sentence is that the current market trend is showing a bullish trend. And next, a trader believes that United States stock market, represented by the Standard & Poor's 500 (SP 500) index, is expected to outperform the Malaysian stock market, represented by the FPMKLCI, in the next few months. What is meant by this is that SP 500 index, which is the US stock market index, is showing a much better performance than FBMKLCI, which is the Malaysian stock market index. And we also given the data which state that September KSF futures is 1850 and September SP 500 index future is 2750. The exchange rate for USD to MYR, which is 1 ringgit to 3.92 ringgit, 1 USD to 3.12 ringgit. And the next is the SP 500 index contract value is SP 500 index time USD 250. Then the question wants us to describe the strategy that the trader should consider if he were to take advantage of this whole situation, and if at maturity both SP 500 and FKLI close at 2790 and 1860 respectively. And we also need to show the trader's profit or loss position in MYR. How to answer this question? The first step is actually to determine the strategy buy or sell in which future contracts into exchange. What is meant by this is actually we will be identifying which country economy, industry or market performance that is better and poor. For example, if the general market performance is in bullish trend, and we will buy futures which has better performance, which may increase more, which have a big change, and we will sell futures that has weak performance, which might increase less. And if it is bearish trend, we will buy futures that decrease less, and we will sell futures that decrease more and has weaker performance. And the purpose we do this is because we want to do intermarket spread to take advantage of the performance of two different markets by simultaneously buying and selling in these two markets. So in this case, as the stock market is performing well, which indicates a bullish trend, the trader should buy SP 500 index futures because it outperform FKLI as stated in the question. Therefore, we will buy SP 500 index futures and sell FKLI today, as it show weaker performance. Right now we move to the second step, which is to determine the number of contract traded for each index futures. Under this step, there is three things that we need to do. The first one is to calculate value for each underlying index. The second one is to convert the foreign currency to RM equivalent. And the last step is to determine the spread ratio between KLCI and also the FSP 500. Alright, for the first part, which is to calculate value for each underlying index. As usual, to calculate the value of FKLI contract, we will be needed to times the index with 50 ringgit, as the 50 ringgit represent the value for each point in the index. So we'll be using September KLCI futures at the moment as our index, current index, and after we times with 50, we will get 92,500. And for the value of SP500 contract, as stated, SP500 index contract value is SP500 index times USD to 250. So we will time the 2,750 points of the September SP500 index future currently with the $250. So we will get $687,500 as the value of SP500 contract currently. And next, we will convert the foreign currency to RM equivalent. We do this by time the USD that the value of SP500 contract that we get, which is 687,500 with RM 3.92 as stated in the question. The exchange rate between USD and USD is 1 USD equivalent to 3.92 ringgit. So we will time the value with the ringgit Malaysia, and we will get almost 1,695,000 ringgit Malaysia worth of contract after we convert the SP500 contract value from USD to ringgit Malaysia. Okay, now we will be determine the spread ratio for SP500 and also FKLI, and we will be using the formula of foreign index value divided by KLCI value. And the reason we need to determine the spread ratio is because we want to know how many contracts we need to buy, and in this case is for SP500, how many contract of SP500 we need to buy, and how many contract of FKLI that we need to sell right now. So we will be using the formula spread ratio SP500 index future divided by value of FKLI, and in this case the value of index SP500 is 2,695,000 divided by the value of KLI, which is 92,500, and we will be getting the answer of 29.14, and we will round it off to 29 only. And as we can see, 29 times 1 ratio, which what is meant by this is that we need to buy one contract of SP500 index future and sell 29 contracts worth of FKLI. Proceed to the next step, which is step 3. Under this step, we will be needed to construct the spread trending diagram for this question. And in this spread trend diagram, there are 3 columns that we need to take note, which is the first one is time, the second one is US future market, and the third one is Malaysian future market. Alright, for T0, which is today, under the US future markets, we will buy one contract of SP500 at 2,750 points, which is the September SP500 index futures today, and we will sell 29 contracts of FKLI at 1,850 points as it is the September KLCI futures as of today. And then at T1, which is the later time, we will sell one contract of SP500 at the maturity. As stated in the question, the maturity for SP500 is at 2,790 points. And then for the Malaysia future market, we will buy 29 contract of FKLI at 1,860 points as stated in the question for Malaysian future market. Alright, now we move to the last step, which is step 4. And in this step, we will be calculating the profit or loss for each index feature and calculating the net spread. Okay, for the trading profit or loss, we will be calculating for both of the market, which is the Fkli and SP500 index feature. For Fkli, we will be minusing the selling price by the buying price, and we will time the amount with NOC and also time with the contract value, which is 50 ringgit for Fkli. Alright, the selling price for Fkli, as stated, the question is 1,850, and will be minusing by the amount of 1,860. The amount then will be timed by 29, which is the number of contract for Fkli, and then will be timed also by 50 ringgit, and the answer that we get, the value that we will be getting is in negative value, which indicate that this is our losses, and the loss is valued at 14,500. And next, for the SP500 index feature, by using the same formula, only change the contract value at the end, which is we'll be using the $250 as our contract value. So the selling price is 2,790 minus by 2,750, and the value will be timed by 1, which is the number of contract for SP500, and be timed by $250 as it is the contract value for SP500 in the future, and we'll be getting almost $10,000 as our profit. Then we will be need to convert the SP500 in the future profit that we get to RM equivalent. So this step is easy. We just need to time it with 3.92 ringgit, as it is the exchange rate as stated in the question also, and we will be getting the amount of 39,200 ringgit as our profit for the SP500 index feature. And lastly, we need to calculate the spread profit or loss, and we will just need to plus the Fkli loss with SP500 profit, which is for Fkli, the loss that we get is negative 40,500, plus with the profit that we get from SP500 in the future, which is 39,200, and we will be getting the net spread profit of 24,700 ringgit Malaysia.